Welcome. Good evening, Marshall Reddick investors. Want to welcome everybody to this evening's presentation on reverse mortgage refinance, and more importantly, how to use a reverse mortgage for purchase transactions. For those of you who are new to Marshall Reddick, welcome. Just a little bit about us. We've been around since 1979. And I just want to kind of go over a few points about what really sets us apart. We are definitely a full service real estate brokerage. We can help you buy and sell your primary residence, but we also work with our investors. We can help you buy and sell your investment property as well. The other thing we have is we have property management. That's probably one of the most important aspects when you are a property owner. Having good property management is so important. Our investors a lot of times don't want to take on the role of landlord. We do that for you. We take care of everything from leasing, maintenance, renovations, rent collections, everything that goes with being a landlord. Our property management team takes care of for you. We also have a third division, which is our private lending. With private lending, we have two clients. You can be either. You can either be the bank or the borrower. We have people that lend others for fix and flips, spec builds, investment properties. You can use self-directed IRAs. The same way as a landlord owns real estate and collects rent checks, our lenders invest in mortgages and collect the mortgage payments. So that's another facet. If you want to hear more about it, please do contact me offline and we can chat some more about it. A little bit about myself. My name is Sherry, and I am a licensed real estate agent. I've got about 20 plus years of experience in residential real estate. I've been assisting buyers and sellers with their primary and their investment real estate. I also have 7 years in real estate finance. I was working for Wells Fargo, and I am actually familiar with the traditional conventional mortgages as well as the reverse mortgage. I'm also a California native. Bought and sold dozens of investment properties in 3 states over my lifetime, done fix and flips, and I'm recently involved in private lending, which is great. I'm the bank right now for some properties out of state. So real estate is truly my passion. So where to begin when you're an investor? Number one, education. The more you learn, the more you earn. And that's why you're here with us tonight, which is, I'm so happy to have you. If you do want to get more in depth in any of the things that Marshall Reddick does, please, we can schedule a complimentary consultation with an advisor like myself, and we can go through your personal situation and assess your needs. And from there, we also work with you on a tailored plan to your specific goals. So at the end of our evening's presentation, I'll give you some information on how to get in contact with us, but a little bit more on how a consultation works. What we do is we sit down with you when we do a consultation, and we go over the who, what, when, where, why, and how. We start with your goal setting. Where are you at this moment in your life, and what are you looking to do? Then we evaluate your options. How are you going to get there? Are you going to use conventional financing, private lending, cash? Are you going to open a self-directed IRA? Then we look at time frames. Do you want to buy one property every year for 5 years, or one property every 2 years for 10? One property will never make you wealthy. Investing over the long term will. We also look at setting your criteria. What are you looking for? What property class? Do you want an A property, a D property? Are you looking at single family residences, duplexes, multifamily? After we go through that, we identify markets. We have 16 markets that Marshall Reddick advises our clients in. We have researched market data package. We talk you through the pros and cons of each market and help you decide where you want to invest. Finally, we introduce you to all the key players, the boots on the ground area agents who are experts in that market. lenders, 1031 accommodators, tax professionals, property management team, insurance, renovation people, attorneys. We all work as a team, and we're all there for you on your side 24/7, 365. Let's talk a little bit about our markets. Our markets are chosen, number one, we want really landlord-friendly markets. And you're going to say, well, California is on that list, and California, we all know, is not landlord-friendly, but we love our home state of California, and we do have a lot of investors that own their primary residence and buy and sell with us for primary. The other markets that we specialize in are definitely much more landlord-friendly. And so lastly, why have we chosen these markets? Not because they're a great place to take a vacation or where you've grown up. Our criteria is based on research. We look for places that have jobs. We look for places that are landlord friendly, low cost of living. We want high rent versus lower purchase price. Then there's also the vacancy rate. We want low vacancy. We don't want a place that there's going to be a lot of turnover. Economic diversity is probably one of the most important. We're not looking for a one-horse town, someplace like Detroit where they are 100% dependent on auto. We want a place that has many markets, many different opportunities for economic diversity. Then also we want strong education. We look for places that have universities. And probably the number one, this should be probably the number one thing on our list, is reliable property management. We need to know that we have boots on the ground, professionals working with your piece of property. And once again, they're for you 24/7, 365. Now, what I'd like to do, told a little bit about myself, I'd like to talk and introduce you to a really good friend of mine. I have known Kim we've been going back and forth probably 15 plus years. Kim has stayed in the reverse mortgage world that entire time. She is definitely the go-to expert. She lives, eats, speaks, thinks reverse mortgage. She definitely knows everything there is to know about it. She's my go-to whenever I have a question, because laws and lending limits and the programs change every single solitary day. So I would like to, definitely my privilege and honor to introduce Kimberly McPhee, reverse mortgage educators.
Gosh, thank you, Sherry. And yes, we've known each other longer than we probably will admit, but yeah, we've known each other for a long time. So thank you for having me tonight. The goal tonight is to talk about reverse mortgages, refinance and purchase. I think you'd be hard pressed in the world today to find somebody who hasn't heard the term reverse mortgage. May not know exactly what it means, but have at least heard the term. So I want to dispel some of those things around the reverse mortgage. So what is a reverse mortgage refinance? When you talk about somebody says they're going to do a reverse mortgage, more often than not, they're going to do a reverse mortgage refinance. And what is that? It's just like the mortgage you have on your house now, except you have an optional monthly mortgage payment. You never have to make a payment as long as you live in the home for the rest of your life. A lot of times you can qualify for a reverse mortgage when you can't qualify for other types of financing. And you have the option of taking cash out through a lump sum, a monthly installment, a mix of both. And you can use it to refinance a single family residence, a condominium, 1 to 4 units, and you have to live in them. So again, it's just a typical mortgage, except that you don't have to make a mortgage payment. How nice is that? So how does the reverse mortgage refinance work? And we're going to look at a hypothetical 73-year-old borrower. And one thing I want to make note of is that there are 2 primary types of reverse mortgages currently. There's the FHA, or the home equity conversion mortgage, that's backed by HUD, and then there's also the proprietary mortgage. So the one I'm going to be talking to about tonight is the FHA loan. And also to note that it's April of 2021, and the current FHA lending limit is $822,375, and that'll kind of come into play here with the scenario I'm going to talk about. So this particular hypothetical 73-year-old borrower has a home worth about $950,000, and they owe $200,000, and they decide they're going to do a reverse mortgage refinance. Well, this particular homeowner qualifies for approximately $456,500. And people say, well, what's the loan to value? What's the loan to value? This loan is also age to value. It's loan to value and age to value. And the rule of thumb is that the older you are, the more you qualify for. The younger you are, the less you qualify for, based upon actuarial tables, life expectancies. So again, the older you are, the more you get, the younger you are, the less you get. So basically, the reverse mortgage would pay off that existing mortgage of $200,000, and the remaining money, you have a couple of options, a way that you can take that money. You can do a payment, term or tenure. You can do a line of credit with a growth factor, or a lump sum. When we talk about payments, term or tenure, term, somebody tells us how much they want and for how long, and we try to make those numbers work, and we can change them around so that the numbers do work for the time that you want the term. Tenure is lifetime. Basically, as long as you live in that home as your primary residence, each and every month you're going to get a payment. You can also have a line of credit that has a growth factor, and basically you can draw upon that when you need it for life's expected, unexpected. Or you can take a lump sum or a combination of. So let me give you an example where a person might do all of those things. Say, for example, they pay off their existing lien, and then they say, you know what, give me $10,000 up front for some credit card payment that I have, or some debt that I have. And then give me $250 a month till I turn 75, and then I'm going to turn on another investment vehicle. And then also make sure that I have that line of credit so I can pay my property taxes, or, you know, the new water heater. So that's a scenario where somebody would use all those various factors of the reverse mortgage. So you can see that it's very flexible. And best of all, you have an optional monthly mortgage payment for the rest of your life. Stay in the house, don't have to make a mortgage payment, or you can if you don't want to, or you can. FICO scores are not considered. Limited income is okay. You still have to pay your property taxes, your homeowner's insurance, and your HOA dues if it's applicable. And you must maintain the home to minimum FHA standards. What does that mean? You can't have a gaping hole in the roof. You can't have windows that don't have glass in them. So basically just making sure that the home is maintained so that you can live in it. So that, in a nutshell, is what a reverse mortgage refinance is. It's basically a loan, but you don't have to make a payment. Try that with your current lender and see what happens. So what is a reverse mortgage for purchase? It's just like the reverse mortgage refinance, basically. A homeowner is going to usually sell a house and buy another one. They can also use this to purchase a new home construction, or it can be an existing house, or it could even be the house that they're currently living in, and maybe they're renting and the landlord decides that they want to sell and you want to buy it. Or it could be somebody that sold their house years ago and they've been renting and now they want to move out to have their own home. Or maybe they've never owned a home and now this is their first time home buyer and they want to use a reverse mortgage for purchase to do it. The loan features are just like the reverse mortgage refinance. You can still live in it for the rest of your life. A lot of times you can qualify for reverse mortgage financing for purchase that you might not qualify for other financing. And again, you can use it to buy an owner-occupied single-family residence, a condominium, or a 1 to 4 unit in which you live in one of them. So that's a nutshell of the reverse mortgage for purchase. And now we'll go through that same scenario for that hypothetical 73-year-old borrower. We had talked about the loan limits and whatnot. So we're going to talk about the FHA limit loan for this particular borrower. He has a home for $850,000. And then after he sells it, he or she sells it, he's going to net $400,000. So after he pays his fees, pays up any existing liens, he has $400,000. And he wants to buy a right-sized or a downsized home for $600,000. Well, if you look at the math, he got $400,000 in his pocket. He wants to buy $600,000. Where is he going to get that other $200,000? Maybe they're retired on a fixed income, and it might be a little bit difficult to qualify for a traditional mortgage. So what are their options? Well, they could take $259,000 of that $400,000 that they net, and they can use that as a down payment towards their right-sized, downsized home. Then they're going to get reverse mortgage proceeds for the remaining $341,000. So basic math, if you add the 259 and the 341, you get to your 600,000, and you don't have to make a payment. The nice thing is they retain 141,000 from that 400,000 that they netted from the gain on their previous residence. What can they use that for? They could use it for home improvements. They could fund retirement. They could gift to a charity. They could help their grandkids out with college. They could take it to Vegas, put it on the roulette wheel. I don't recommend that, but I can't tell you what to do with your money. It's your money. And best of all, they have the optional monthly mortgage payment. Again, FICO score isn't considered, and limited income is okay. And at the right of your screen, you'll just see that, again, the house sold for $850. They had a net gearing of $400,000, and their new home purchase price was $600,000. The down payment of $259,000, the reverse mortgage $341,000, and they still have $141,000 retained in their pocket. So you asked, why would anybody do a reverse mortgage for purchase? And I wanted to tell you a quick story about one of my clients. My client, she and her husband lived in San Diego in California, and they were living their life, and then unfortunately her husband got sick and he did pass, and she decided that she wanted to be closer to her daughter. So what she did is she sold their home in San Diego and she moved to be closer to her daughter, and she bought a 2-story condo. She took every single penny from that home sale and she put it into the 2-story condo, because she knew that she would have an awfully hard time qualifying for a loan based upon what her single income was now that she was a widow. So fast forward a couple of years, and she was out to dinner with her boyfriend and her boyfriend's son, who happened to be an estate planning attorney, and they were having a really tough conversation that did I tell you she had a 2-story condo? She also had a dog. And every single day she went up and down those stairs 2, 3, 4 times, letting that dog in and out. And after a couple of years, she says, I'm done. I can't do this anymore. I need a 1-story home. So she knew with her limited income that she wasn't going to be able to stay in the area that she wanted to stay. So she was going to have to move out of the area. And they were talking about what was going to do to the relationship and what the future looked like. And the estate planning attorney's son said, why don't you do reverse mortgage for purchase? And they both said, what's that? Well, I got introduced into the conversation, and the gal sold her 2-story condo. She moved to another area that she bought a single family, 1-story residence, and she had a little bit of leftover in the same scenario where she didn't put down all of her proceeds onto the new property. She did have a savings account or money left over. I talked to her about a month after the loan closed, and we talked, I said, how's it going? She says, it's 10 o'clock in the morning. She goes, my dog is in the backyard running around, happy as a clam. She goes, I'm not even dressed. I'm in pajamas reading the newspaper. She goes, it's so nice not to have to climb those stairs or go down those stairs to take the dog out. But she says, Kim, you know what the best part about this mortgage is? She said, I have a savings account. For the first time in about 15 years, I have a savings account. She said, when my husband was ill and he had to quit his job because he couldn't work, and I was the only person working, and every paycheck, if there was another medical expense or a copay or some type of medical thing that we had to deal with. She goes, it was so stressful. She says, it was stressful. My husband was ill, and financially we're worried we're going to lose our house or be living in our car. She goes, it was just a very dark time in our life. She says, now for the first time, like I said, I have a savings account. So I know that those tires on my car out there that are starting to go bald, I can buy them. I have a savings account. If I want to go to the movies, I've got a savings account. I finally feel a little bit more secure in my life knowing that I have that savings account. So this has really been the best outcome for me. And then as a side note, that boyfriend is now her husband, and they are living happily ever after in their forever home. So that's why somebody might do a reverse mortgage for purchase. And then also, we talk about anybody, why would they do a reverse mortgage? Well, all you have to do is look at market growth and some key factors. And a lot of you have probably heard that 10,000 baby boomers each and every day for the next 9 years are going to be turning 65. There are 78 million post-World War II baby boomers that are now between the ages of 56 to 76. So really they're in their prime wage earning years and the early retirement years. I've had financial planners tell me that when people retire, they have the go-go years, the slow-go years, and the no-go years. And each one of those go years has a cost associated with it. The go-go years, you retire, you're traveling, you're putting money into the economy, then you kind of slow down, stay at home a bit, and then you're in the no-go years. And then usually there's health costs associated with that. So in looking at baby boomers, 45% of baby boomers have no retirement savings. Only 55% of baby boomers have some retirement savings, and of those, 28% have less than $100,000. So that's approximately half of all retirees are or will be living off Social Security benefits. In 2019, the average Social Security benefit was $1,461 per month. So in retirement, we find that you retain most of your expenses but have a reduction in income. There's not a whole lot of defined benefit plans left, and 401ks have taken over, and most of the time when you take money out of that, it's a taxable event. So when you look at that $1,461 per month, that is about $17,000 a year. Just think if you're one person and you have a mortgage, you have property taxes, you have insurance, you've got maintenance, you've got food that you need to eat, you have a car payment, maybe you have credit card debt, and God forbid you want to go out and have a cup of coffee. On $1,461, what are you going to do? So a lot of times this may be an opportunity for a reverse mortgage. Also, when I talked to a lot of realtors that do, back in the day, they did door knocking, and they knock on the house of somebody of a certain age, and they'd say, have you thought about selling your house? And they're like, oh, I would love to, but I just can't afford to. Well, why not? Because they knew that with the house that they had with an existing mortgage, that if they sold it, they'd be like that scenario before where they want to go somewhere at 600,000 and they only net 400,000. How do they do that? Well, they may just not know that you can use a reverse mortgage for purchase. So in this statistic, the house rich and the cash poor, there are about 25.6 million homes that are owned by persons age 65 plus. 68%, or about 17.5 million homes, are owned free and clear, and that's over 7.14 trillion in equity owned by older homeowners. So basically it's dead equity if you're not using it. I heard a statistic the other day, I think that number is now up to 8 trillion. I just completed a loan transaction for a realtor couple, and they came to me, they said, we want the equity in our house. And the only way we can get it is to sell, which we don't want to, or to take out a loan and make a payment, which we don't know that we qualify for. So they ended up doing a reverse mortgage. So they were kind of house rich and cash poor. So what happens in the future? All of my clients say, what happens with my kids? What happens? What happens? Well, in the end of the day, if your home value, this is an example, if it were worth 600,000, your loan balance was 400,000, your heirs have a couple of options. And this is where I also put in a plug to make sure that you have your estate plan in order, because if you don't, your house is going to be in probate and it may take a long time for your heirs to get any type of money. So I'll put a selfless plug in there for that. But in this scenario, the heirs have the option of paying off that $400,000 debt. They can either take out another loan, they can use cash, they can use a combination of the two. And what I see happen primarily is they sell the home and they pocket the equity. For the most part, if the kids are living out of the house, their lives are established somewhere else. They have their own homes, their own families, their own kids, their jobs, and they don't really want your house. They just want the equity. So what happens if you're underwater? Say, for example, the home was worth $300,000, your current loan balance is $400,000, you're upside down. Well, the heirs, again, they can pay off the balance of 95% of the fair market value. So for that $300,000 value, they can pay it off at $285,000, and they can immediately have a $15,000 equity stake. They could also do nothing and let the bank mitigate their losses. It's a non-recourse loan, so they can't come after the owners or the heirs for that outstanding balance, or they could also do a short sale listing. When you talk about possible underwater, I did a loan for a couple in the Riverside area back in 2005, 2006. Their house was at the peak of its value. And what they chose is they paid off their existing lien, and then they opted for that tenure or lifetime payment. So they lived their life. They paid off their mortgage, didn't have to make a payment, and they were getting a check each and every month. Well, fast forward 2008, 2009, and we all know what happened with the housing bubble, and their house value dropped precipitously off the cliff. Just overnight, it was worth half or even less than half of what it was prior. And then talk about 2013, 14, things started rebounding a bit, and they called me and they said, we're getting all these letters in the mail to do a refinance of our house. Do you think we should do it? Well, I ran the numbers for them, and the numbers don't lie. And I said, nope. I said, stay right where you're at. I said, if you did a refinance today, that amount of money that you're getting each and every month for your 10-year payment wouldn't even come close. So sit tight, stay where you're at. So they went on for a couple more years, and then the wife called me and she said that her husband had passed away unexpectedly, or unfortunately, and she goes, what do I have to do? I said, nothing, just pay your taxes, pay your insurance, and you're still going to get that same 10-year payment each and every month. It's not going to be cut in half because there's only one person, like stay tight. So fast forward, I haven't spoken to her in about a year, but she may be upside down, but the good thing is that she and her husband were able to live in that house, not make a mortgage payment, and they got another monthly payment on that 10-year payment. So that's, what can happen in the future. So what are some of the myths? Well, they talk about the government owns your home. You and I may have a mortgage and we're paying our mortgage, but we're also putting on a new roof and maybe do some remodeling and painting, and we consider it our house, and it is. We're just making a payment. So just like that, you have a collateral on your house is the mortgage. So same thing with the reverse mortgage. One of the other myths is that your heirs will lose any future appreciation in the home. Just as we talked in the previous slide, that if you're right side up, the heirs have the ability to sell the house and take the equity, or pay off the loan and keep the house. Your heirs can't inherit your home after you pass away. Just like we said in the other scenario, if you're right side up or upside down, you have ways of keeping the house. And then if the house ends up underwater, you can't live in your home. I think the scenario we talked about with my borrower, her husband passed and she was able to continue to live in the home. Just pay the property taxes and the homeowner's insurance. What are some of the other obligations? Well, a homeowner has to live in the home for their primary residence. So if a homeowner has been out of their home for 12 months, the loan need to be paid off. If they can reestablish their residency, then the clock can restart. But for the most part, if someone's been out of their house for 12 months, usually the heirs are selling the house to pay for care for a loved one somewhere else, whether they're in a skilled nursing or memory care. And like I said, usually they pay the house to pay for the bill somewhere else. They have to pay their property taxes, their homeowners insurance, association dues if applicable, and make sure that it's to FHA standards. So briefly, that in a very short period of time that I talked about the reverse mortgage refinance and the reverse mortgage for purchase. And I always get asked, who are your clients? What do they look like? Well, I do a lot of reverse mortgage for people who are recently widowed. And in a relationship, brother, sister, husband, wife, mother, father, mother, daughter, there's two people, there's two incomes. And a lot of times there's two Social Security checks and a pension. And when one passes, the other will get grossed up to the higher of the two Social Security checks, and the pension may go away. And the lender doesn't come to the house and say, guess what, just pay half of your mortgage, there's only one of you living here. And the tax collector definitely doesn't say that. Oh, just pay half the taxes, there's only one person. That doesn't happen. So just like that other slide when we talked about that you maintain the majority of your expenses and let your income drops in retirement. And a lot of times people will come to me, Mrs. Jones will come to me and said, I really want to do this, but my neighbors say it's horrible, terrible. And I said, well, tell me about your neighbors. She goes, well, Mr. and Mrs. Smith, they have Social Security and they have pensions. I said, stop there. I said, you're not comparing apples to apples. They're two people, they have two incomes. You're one person, you have one income. You can't compare yourself to them. This may not be the situation or the solution for them, but for you, it may very well be. So again, I get a lot of people who are recently widowed. I get people also who have been divorced, in the sense that maybe they divorced young in life and they kept the house and the kids, and you fast forward 20, 30 years, hopefully the kids are out of the house and now there's no other visible means of support in regards to retirement. I also get a lot of people who have lost their job, right-sized or downsized. If I had a dime for every time somebody told me, I never planned, I expected to work until I dropped, I never planned that I'd have to quit my job to take care of my husband with dementia, I never planned. Well, a lot of times when you don't have a plan gets made for you. So a lot of times this can be a solution. Last year, a lot of people used reverse mortgage proceeds to pay for in-home care. They may not want to put a loved one in a facility because of various reasons, and the people who come to the home to take care of individuals are very lovely people, but at the end of the day, it's a job and they do need to get paid. So when you look at all the factors involved, it's not always a loan of last resort. I also had a client that lived in a big, nice two-story house, and they loved to golf. And every year they would go out to the desert with their friends, and they'd stay with them and they'd golf and have a good time. Well, then later they'd say, hey, can we bum your condo out in the desert? We want to go out and golf. And their friends had wised up and they said, sorry, it's rented out. And they said, oh, no worries, we'll just stay in a hotel. Well, the hotels in the desert in the winter are usually packed because there's seminars going on and people are coming from snowy locations and they want to be out in the nice sunshine. So my clients were like, oh, this is crazy. So what they did is they did a reverse mortgage on their primary residence, paid off a small loan. They bought a condo out in the desert for cash. Just paid the homeowner's insurance, the taxes, and the HOA. And then when their kids got wind of this, they were like, hey, I don't know if this is a good idea, i.e. my inheritance. What are you doing, Mom and Dad? And Mom and Dad said, you know what, kids, when we pass, you're going to get our house here with a very small mortgage, and then you're going to get a condo out in the desert. Free and clear. You can sell it, you can rent it out, you can keep it, you can do whatever you want. You now have two houses. And well, they got on board pretty quickly. So again, it's not a loan of last resort by any stretch of the imagination. But again, it's just something that people need to get education on and find out about if it's for them. So I think in a nutshell, that was the reverse mortgage and reverse mortgage refinance and purchase. So Sherry, do you have any questions?
Wow, that was a lot of great information, Kim. really, really good. It's just, there's just so much you can do with it. It's very, very flexible, which is what I love about it. And once again, it is not the end of the world that you have a reverse mortgage. It's actually a great financial tool. A lot of financial planners, I think you might speak to this as well, a lot of financial planners do recommend it. It is not a negative thing. It'd be a great way to parlay. I love your example about being able to buy a second place in the desert. Who wouldn't want to put a second place in the desert? I certainly would. So anyway, I really appreciate all that information. Do you want to, why don't you speak a little bit about how to get a hold of yourself and your hours and
Yes, absolutely. My contact information is on the screen. I have an 800 number. I've got an email, got a website. You can call me anytime. I think with anything like when Sherry talks about real estate and I talk about the mortgages and any facet of your life, you need to get education. Whether you're trying to get education about your finances, trying to get education about your health, seek out a professional. If you have to pay money or even if you don't, get some education and make sure that you make an educated decision and you're not operating in a vacuum. Especially when we're at a certain point of our life, we don't have a lot of runway in front of us. We've got more runway behind us. So we want to make sure that we make the right decision so that we benefit from the decision that we make. So I would definitely encourage anybody to sit down with a professional to talk about this. You know, again, the reverse mortgage, especially the purchase, you know, you can have less than stellar credit, you can have less than perfect income. You still need to work with myself and Sherry to get pre-underwritten, making sure that somebody looks at your financials, looks at your qualifications, make sure it's not always a walk in the park per se, like, hey, I want the reverse mortgage, can you get it? There's still requirements that you have to meet. So again, I would definitely suggest that you go out there, get your education. And I always like to leave with my little tagline and just say that my name is Kim McBee and I am moving forward in reverse. So thank you very much, Sherry.
Thank you so much, Kim. This has been great. And definitely, I can't state any more than you did. It's very, very important to get educated, to talk to the people who are the professionals, whether it be reverse, whether it be, you know, real estate, investing, primary residences, second homes. Another really great way to get started, you've had this webinar here tonight and you're getting a little bit of information, but go on our website. I really encourage everyone to go to www.marshallreddick.com. We have so many recorded webinars, whatever topic that interests you, whether it be the reverse mortgage, whether it be investing out of state, whether it be estate planning, whether it be learning about IRAs, self-directed IRAs to purchase real estate. We have something for everybody. Another one that I would really recommend everybody download is our ebook. Once again, just go to marshallreddick.com/ebook. It talks a lot about how we determine markets and investing and different classes of real estate. Once again, just another tool for your tool belt. I highly recommend everyone do that. And if you want to schedule a consultation with either myself or Kim, please screenshot this. You've got my contact information. Get a hold of me. You can actually, I will also just give you my cell phone number right now. It is 949-412-2617. Go ahead, give me a call, email us, whatever you want to do. We'd love to chat with you more about anything real estate. And I think the reverse for purchase would be it's a great vehicle for anybody who, for some reason, and there's a lot of reasons out there why somebody would not qualify for a conventional loan or maybe not want private lending. Reverse mortgage rates, and I'll let Kim maybe chime in again, reverse mortgage rates are very competitive and very similar to our traditional mortgage rates these days, aren't they?
Yes, absolutely, absolutely.
Okay, perfect. So yeah, when you're thinking about not being able to qualify for conventional, maybe not wanting the extra fees associated with private lending, maybe a reverse mortgage for purchase is the answer for you. Just, you know, like I said, another tool for your tool belt. And with that, I want to once again thank you so much for being with us, Kim, this evening.
Thank you, Sherry. I appreciate you having me. It's been a great opportunity.
All right. We hope everybody enjoyed tonight's presentation, and we look forward to hearing from you guys.